There's no denying we're in unprecedented and volatile times, with the markets having daily swings up and down 10% last month. Gold is holding its own though as a safe haven asset, plus 7% year to date, versus the Dow Jones minus 25% year to date, and the S&P 500 minus 23% as of April 2nd. And that's after last week's bounce back. This week on March 30th was the deadline for TSX issuers to file their audited financial statements. So me being a CPA and former investment banker, I couldn't resist nerding out, checking out some of the financials of mining stocks I like to follow. One that stood out to me was Sabina Gold Silver, a well-known gold developer with a 7.2 million ounce gold deposit in Nunavut. But the main area of interest you should be looking at for any pre-producing company is their cash balance on their balance sheet. Sabina is looking good with over $21 million in cash and cash equivalents and $5 million in short-term investments. Right now in this environment, cash is king. I cannot stress this enough. There's a reason for that saying. Companies that aren't well financed right now are going to be in a difficult situation going forward for a number of reasons. Primarily with this coronavirus, companies can't go on roadshows, which are investment marketing trips, and traditionally meet with investors face to face. So they're primarily resorting to communicating with investors online right now in this environment. So if you're looking at wading into some gold names right now, make sure they're well financed like Sabina and can weather this storm for the next 6 to 12 months. The cash flow statement is also critical to review because, as the name implies, you can see where the cash is flowing. Assuming Sabina were to stay put, this would only be around $3 million for the next 6 to 12 months by looking at their net cash used in operating activities, which would easily be covered by their $26 million in readily available funds. I'm not saying Sabina will do that, but you can sleep easy at night knowing they can cover essential services, sort of to say. If you're new to investing in gold stocks, Sabina is a name that should be on your radar. This is a company with a rare and coveted asset. Looking at their fact sheet, it easily shows how Back River is a standout deposit from other 5 million ounce plus gold deposits across the globe. Not to mention, it has the highest grade open pits globally at 6.2 grams per ton gold. If you're not familiar with this term, open pits these days are running around 1 gram per ton gold globally, and that's a generous figure. The economics are robust at an $11.50 per ounce gold price, but we're in a $1,600 per ounce gold price environment right now, which has a very positive impact on the post-tax NPV of Back River. But don't forget, the significant drop in the Canadian dollar will also positively impact economics, as Sabina would be producing in Canadian costs and selling gold in US dollars. I won't run through the whole deck, but if there's one slide you should be looking at, it's this one, which is highlighting the value proposition that Sabina and its Back River project offers. Some very smart investment bankers at RBC Capital Markets put together this excellent slide, and it's showing us grade versus ounces for global gold developers. Sabina is a clear standout in both categories, with the median resource being 2.4 million ounces and Sabina having a resource of about 7.2 million ounces and an overall grade of 6.2 grams per ton versus the median grade of 1.7 grams per ton gold. Worth noting are the backers of Sabina, which are Dundee Precious Metals, Sun Valley Gold, Zhaojin, and Wheaton Precious Metals. This is a roster of large mining corporates and a sizable institutional gold fund, meaning if Sabina did need more money, these shareholders have deep pockets. You can find more information on the company at sabinasilver.com and check them out on the TSX exchange under the trading symbol SBB. If you like this video, make sure to subscribe and drop a comment down below. Thanks for watching and good luck in the markets.